Hello, everyone. Welcome to a PPI report. This is a report on producer prices. It is the seller's version of CPI. CPI is the Consumer Price Index. The next one comes out on Tuesday. You might remember last month, markets rallied after CPI came in below expectations. The very next week, producer prices came in below expectations. Those were two very good reports in a row. Only 3 weeks later, already we have the November numbers for PPI. They come out in about 30 seconds. We are expecting a survey of a month-over-month PPI read of 0.2 relative to last month's 0.2. Core 0.2 versus last month 0. Those are the month-over-month. And PPI final demand year-over-year expected to be 7.2. Prior was 8. Buckle up because it's going to move the market today. All right, and here it comes. Let's see. Okay, it comes in slightly hot. The survey was 0.2. It came in at 0.3. The year-over-year number came in at 7.4. That's down from 8, but slightly hotter than that 7.2 we were expecting. Core PPI, which is less food and energy, comes in at 6.2. So it's showing that actually core producer prices still coming in a little bit hotter than expected, but it's trending down. That's very important. The last survey was 6.7. This survey, we were expecting to go all the way down to 5.9. We actually went to 6.2. So slightly higher than expectations, but trending down. That month-over-month number did come in at 0.3 rather than 0.2. So it's still showing that inflationary pressure is still there. It's certainly in that downtrend now, which is good though, because the worst case scenario here would be a miss to the upside, right? Like the trend moving up. The trend is moving down, with the exception of month-over-month at 0.3. But otherwise, PPI less food, energy, and trade comes in at 4.9. That's under that 5.9 or 5.4 we had last time. Above the survey, though, of 4.7. Against PPI core coming in at 6.2. That is slightly above the survey of 5.9, but again, below 6.7, the prior read. Final demand year-over-year, 7.4, above the survey of 7.2, but below the prior read of 8%. Again, that month-over-month PPI, that's probably the biggest issue, is that the prior read was 0.2. The current survey was 0.2. We actually got 0.3. We do get in about 90 minutes the University of Michigan consumer sentiment surveys. So we'll see what's going on with inflation expectations there. But I'm going to actually get the PPI report up. In the meantime, I want to remind you that today is a stock market exchange ringing the bell day. So in other words, I will be going to the New York Stock Exchange ringing the closing bell at 4 p.m. Eastern time. After that, I will be doing a meetup outside. So you're welcome to come meet outside. All right, let's get the latest PPI numbers here. I actually don't think they have their website updated just yet. They're still showing the October numbers. There we go. November rise. Okay, perfect. We got it. It is also the expiration of the PP coupon code linked down below for December, and we'll be releasing some new lectures for everyone for free once we get into the rest of December here. But let's go ahead and look at the report now that I have it handy here. So again, we did get a slight miss here to the upside with producer prices rising 0.3% in November. Final demand 0.3% October, September. Oh, they actually adjust. Oh, that's actually really interesting. They revised October up to 0.3. That's actually somewhat a good thing, because if last month was moving at a 0.2% pace and then now we're at 0.3, that implies a worsening. But what they've actually now done is they've revised October, it looks like, to 0.3, which means we're just stable. However, this is leading the markets to certainly leg down a little bit on this slightly here. QQQ now down about 0.6, whereas previously it was up. In November, most of the increase for the final index came from an advance in prices for final demand services. This is one of those red flags that Jerome Powell talks about, right? Jerome Powell really wants to see us, wants to see services move down. And unfortunately, right now, the only thing we're seeing move down Our stock prices. Although we are starting to get a little bit of a rebound already. I think possibly because the market may be realizing that there was an upward revision here on the last one. By the way, there's an individual here, well, whose name we're not going to pronounce, who says, "Shut the f up with your coupon code," which reminds me to remind you about the expiring coupon code today. Okay, continuing on here. Prices for final demand, less food, energy, and trade services moved up 0.3 after rising 0.2 in October. Okay, so there's again a little bit of that miss. We don't want to see that. Final demand services. The index for final demand services advanced 0.4% in November after edging up just 0.1% in October. Darn, we went from an edge to a full pump here of 0.4%. That's not so great. Leading the November increase, and I do wonder how much of this is not being seasonally adjusted because of Black Friday and Cyber Monday, although they're supposed to be seasonally adjusted, which would imply that we're comparing to a Black Friday of last year, so you wouldn't necessarily have much of a shift there. So you should be actually seeing an increase here, which is not ideal. Prices for final demand services, less trade, transportation, warehouse climbed 0.4%. Margins for final demand trade services rose 0.7%. That's terrible. In contrast, prices for final demand transportation and warehousing services fell 0.9%. That's huge. That's a huge move down there. So look at what you're actually seeing. You're seeing that slow transition to deflation, right? It starts with people ordering less stuff, less goods. Now it turns into warehousing services and transportation plummeting. However, you still have trade services up 0.7%, right? So it hasn't that deflation hasn't contaged over to all areas of the services world just yet. About 1/3 of the November rise in final demand services can be traced to prices for the securities brokerage, dealing, and investment advice, which jumped 11.3%. Now, this is very interesting. 1/3 of the increase did not actually come from actual services related to product. It came to services related to trading, trading securities related to product or cross-border trade or even trade within the United States. That's very interesting to me. The indices for machinery and vehicle wholesaling, loan services, fuels, lubricants retailing, portfolio management, and long distance motor carrying moved higher. Well, that's not ideal. You don't want to, okay, this is actually a sector that you do want to see move down. So you are getting a mixed read here, which is not great. I mean, we do have that CPI read on Tuesday, which if we miss on that, it's going to be a disaster. But so this is actually quite mixed here. Conversely, prices for transportation of passengers fell 5.6%. The indices for automobile and automobile parts retailing and for traveler accommodations also decreased. How this is such a mixed report. This is quite incredible. Final demand energy decreased 3.3%. Okay, great. All right, let's keep going here. Let's look at the table here. So in November, yeah, this is quite interesting. You could see trade up 0.7, total up 0.4, transportation and warehousing down 0.9. Although in August we had a 1.1% decline. But look at March and February. 2.0 and 5.6% increases, 2% increase, 2% increase. I mean, you've really gone from an era of solid increases right here to almost solid decreases over here. And you're certainly seeing the numbers start declining. So you're trending towards that disinflation, but you're still getting mixed bags. And we don't really want mixed bags at this point. We want clear signals to the downside. And this is not that. Not yet. It shows you cannot be impatient with this market. This market is one that just calls for coffee. And I'm either pouring coffee or Bailey's, either one. It's basically the same thing at this point. All right, let's see. Intermediate demand for November, prices for processed goods fell 0.9%. Okay, goods. So look at that. We are actually seeing goods fall, right? And this makes sense. Most of the increase is being related to services. Go back here just for a quick moment. And it's 1/3 of the increase coming from securities trading and investment advice, and then wholesaling of machinery and loan services, portfolio management, right? Okay, quite interesting. So goods plummeting, processed goods for intermediate demand, prices for processed goods moved down 0.9%. Its fifth consecutive decline. Leading the November decrease was processed energy goods falling 3.7%. Prices for processed materials, less food and energy, declined 0.2%. Good. Commodity prices coming down. This is good. Makes it cheaper to build Teslas. Index for processed foods and feeds advanced. And that's so volatile, foods, though, for grains and for animals and that. 1/3 of the November decline in processed goods can be attributed to diesel fuel. Good. It's actually incredible that you're seeing diesel prices fall with how much fear there was around, diesel shortages. Oh, I love the zero hedge tweet here. PPI hotter than expected because brokers somehow raised prices amid huge outflows, and tomatoes soared over 40%. Uh-huh. Yeah, that was really interesting that 1/3 of the increase was due to brokers. Hmm. Well, you know what they say about brokers? Brokers make you broker. Okay, that's a diss to brokers. I'm actually a real estate broker. I used to be a loan broker too, so I'm allowed to make fun of myself. Even though I don't think it's true, I think in this moment it's convenient. So we'll go with it because that's what you do on the internet. You go with what's convenient and popular at the moment. Hmm. Leading the decrease in prices for unprocessed goods was the index for natural gas dropping 15%. Prices for crude petroleum, corn, hay, hayseeds, citrus fruits, carbon steel also declined. Good. I want to see that Cybertruck get cheaper to manufacture. Conversely, vegetables, with the exception of potatoes, jumped 43%. Raw milk and non-iron ores advanced. Great. You want to see commodities come down. What is this? Cable network advertising. But this increased, also advanced. How interesting. Cable network advertising time sales increased? I'm very surprised by that. See right here, it says the index for loan services, portfolio management, lubricants, cable network advertising time sales, and long distance motor carrying also advanced. However, prices for the arrangement of freight and cargo transportation plummeted 15.2%, and the indices for broadcast and network television advertising sales decreased. So broadcast and network television decreased while network television increased. This is a bizarro report. I think the big tell here is just you don't have a very clear and consistent decline, and it's coming. It is coming. Look at these numbers over here. Look at this chart. So think about how at the bottom over here, when it comes to goods, all of these numbers are negative. All of them are negative here. It's just services are still holding on. All of the goods numbers are negative for certainly the last 2 months, and services are seeing declines. All right, now we're getting into footnotes, some notes about weights. Okay, all right. Let me see what the suits are saying about this. All right, give me a second here. So, hotter than expected. A lot having to do, 1/3 having to do with brokers increasing prices. Shocking to me. We have, let's see here, if I can get a little bit of some insights from what the suits are saying. I always like seeing that. Whoops, so much for downside risks to PPI. Oh, great. Here comes the headline. I hate it when PPI misses. All right. So much for downside risks to PPI. The core reading jumped 0.4% above any forecast in the Bloomberg survey. Headline was also higher than expected, and it all rather suggests the glide path from peak inflation might be bumpier than hoped for some quarters. I know that I wasn't the only one leaning to the downside on this, says this writer here, Cameron Cruz. So it is a little surprised to see an abrupt reversal in equities. Frankly, I'm a little surprised that fixed income hasn't moved. Hmm, that's interesting. Is that true? I would like to see that. Stand by. Indices across the board down about a third to half of a percent. Oil, wow, Brent is under 77. Oh, how interesting. Yeah, okay, well, the 10 year is roughly flat, up about 2 basis points. That's very interesting. Yeah, this PPI was larger than expected. It's certainly lasting longer than expected, too. Future slide yields jump barely. Yields are up like 2 basis points. It's not a big deal. Intermediate PPI down to 7.7 from 10.3% and dropping below final demand of 7.4. First time since November 2020. This is an interesting tweet. Hold on a sec. Yeah, PPI came in at 0.3, some parts at 0.4, above the 0.2 expected. This is the first in 2 years. Oh, that's actually quite interesting. So I do want you to see this chart because it shows you the downtrend, which is good. Hold on a sec. Okay, this is gonna take just a sec to move over. Actually, I can get it more easily here. Standing by for photo, Kevin. Yeah, this is an interesting one. All right. Haha, I did it. Can I rotate it? Yes, I can. All right, here you go. So in red, you could see the producer price index for processed goods, and then PPI index for final demand in blue. You could see both of these plummeting, right? But we already know that. We know that goods inflation is plummeting. It's just now a matter of waiting for uh, services to rotate down. And when brokers are able to charge higher prices, which we got in this report here, you've got a little bit of a downside. Yeah, I'm closing bell today, in case you're wondering. I will be ringing the closing bell. Although I'm going to head over to the stock exchange here after this. Okay, it's all right. So again, a little bit higher than expected. So interesting. Just an hour ago, articles say risks point to downside miss on core PPI. Nope. Came in hot. How unfortunate. All right. So now here we've got an article. U.S. producer prices rose in November by more than forecast, driven by services and underscoring stickiness of inflationary pressures. This is true. I mean, as we went through the report, we were seeing it. It was multiple services across the board. We can't only blame brokers. Multiple services across the board were still rising. PPI up 0.3 for the third month, up 7.4 for the year. However, that is a downtrend, right? And that is good. Down from 8% down to 7.4%, which is again a good thing. Estimates were calling for 0.2% and 7.2. We got 0.3 and 7.4. Data comes just before the CPI release. Cooler demand at home and abroad has taken some stress off supply chains, allowing producer price growth to slow significantly. That's true. Still trending in that direction. However, it's the services segments that will probably keep the Fed hiking. But this is not going to change the 50 basis point hike in December. And then we're not going to have another Fed meeting until February. So, we've got plenty of time for more reports between now and then. Oh, this is an interesting chart. Let's go ahead and look at this chart. So at the top, we have contributions. You could see you have a negative bar in blue from the final demand from energy. Blue is final demand goods, less food and energy, so still seeing a little bit of a rise there. The big pump here, though, is look at that pink and the pink segment. Final demand services. Construction's basically at zero, but final demand services there, you get a nice little pink bar there. That's pretty decent to the upside. And this was the month over month, including top line contributions, top 5 subcomponents. So the next subcomponents trade of personal consumption goods, trade as a type of service, brokering, right? That helped here. Less transportation and warehousing because that was a big negative segment. Finished consumer goods, finished consumer foods, crude. Okay. Yeah, finished consumer energy goods and just goods in general, negative. All right, let's see. Plug elite hustlers at the closing bell. Yeah. All right, let's quickly look at how the Elite Hustlers course I think is actually a phenomenal course. It's gotten so good. The content we have in that is honestly priceless for making more money as an entrepreneur. So many lessons in it. Services will ever pump. Yeah, we got to get the PP up. Got to get the pricing power up. Oh, what happened with Lulu? I'll be doing a report on Lulu. Don't worry. Can you give a brief summary? Yeah, get the beer ready. Yeah, I actually am. I'm kind of nervous. I'm honestly, I'm kind of like sitting here answering more questions because I don't want to get up and go to the exchange because I'm kind of nervous about it. How correlated is PPI to CPI? I would say they're very different, right? A lot of what we just saw in PPI come in hot was actually services related to trade, which have very little, in my opinion, to do. They are an input cost. They are an input cost to products being sold and services being sold for consumers. But I believe that consumers and their willingness to pay will drive consumer prices more. And so I do not believe that hot PPI services numbers imply hot CPI. What they imply is lower margins for certain businesses. I think businesses are going to be bound by the market of what consumers are willing to pay, not by what input costs are for service brokers. Pretend they're all in their underwear. Hey, what's wrong with being in your underwear? Doesn't everybody pour coffee in their underwear? If you're not nervous, you're not growing. That's a good line. I've never thought about that. You know, there's so many people who hate. I think there are a lot of people who have just had a very bad year. 2022 has just been a bad year for a lot of people. I don't especially call it a great year for myself either. It's been a rough year. Will I meet the CNBC people? I hope so. Can somebody let this individual, I can't say it, otherwise I have to send this video in for compliance. Can somebody in this video, in the comments, let this individual know why I'm ringing the bell at the closing bell? The dollar is weakening. Yes, the dollar should weaken. The dollar is extremely overvalued. I've been short the dollar since the summer. Um, in the summer, in one of my trade alerts to course members, I said, be careful. The dollar, I believe, still has another 10% upside. And if you're short the dollar, that's a 10% downside risk. But then it's going to plummet. And so far, that's almost exactly what's been happening. And I'm not trying to pat myself on the back. Okay, I make plenty of mistakes. But shorting the dollar is one I'm a big fan of. This PPI, look, I think what I hope, okay, this is pure hopium, okay? Pure hopium. My pure hopium. Why are futures tanking hard? Scroll to the beginning of the video and then you'll know why. My hopium is that today I will hit the closing bell for the weekend and we will mark the low or a low. That's my hope. And then when CPI comes in glorious to the upside, I hope that that this sort of marks a near bottom. I know the QQQ is not at 8, an exact bottom, but I hope it's the end of this. So again, that's just hope, but cheers to that. So anyway, folks, I got to go. Thank you so much for being here. We'll see you at the New York Stock Exchange 5 p.m. meetup. Take advantage of the expiring coupon code link down below. The prices just go up afterwards when that coupon expires, so you get lifetime access. You may as well hop in And we'll see y'all. Goodbye. Thanks.